In this video, I'll explain what a stock trend is, why it's beneficial to your trading, and how to identify it. When we trade stocks, we want to trade stocks that are trending because they offer better risk to reward and they're more predictable. If we can identify the current trend of a stock, we can assume that the stock is going to continue in that direction of the trend until it experiences a true reversal or selling pressure so heavy that it can no longer continue. A trend is beneficial to us as traders because it can help us to predict the future direction of the stock's price, as well as give us a form of protection because the trend can help support the move higher. They offer very low risk for very high reward. A trending market or a trending stock means that the general movement of the price within that stock is moving in the same direction, either up, down, or sideways. A stock that is in an uptrend is making higher highs and higher lows, and a stock that is in a downtrend is making lower lows and lower highs. In order to trade with the trend, we must first be able to identify the trend. Trends are identified by using trend lines, moving averages, as well as visually observing the stock's price and the swing highs and the swing lows that the stock is making. Swing highs and swing lows are also sometimes known as pivots, tops, or bottoms. A swing high is a peak before a decline, and a swing low is a low before an incline in a stock's price. So you can see right here on Tesla's weekly chart, Tesla opened up and it made this high price, forming a high pivot. It pulled back to this low right here and then continued to move higher. When Tesla moved higher and broke this high right here, this became a swing high, and this became a swing low since this previous high had been broken. And this is considered a swing high because it's a peak before the stock declined again. And right here, this is considered a peak low because this was the low before the stock inclined and broke the previous high. Since the price of the stock moved higher, this right here will act as the new swing low until it is broken. Since this was the previous swing high, when this area gets broken, this becomes the new swing high. Since this area right here was the swing low before it broke this swing high, it becomes the new swing low. So the market moves in waves or stair steps, or ups and downs. And these waves or ups and downs form the three trends. The first of the three trends that we're going to talk about is the major or primary trend. A major trend lasts for at least 1 year and shows a rise or decline in the stock's price of at least 20%. So these areas in between these blue lines each represent 1 year. Since these areas represent a year each, we will want to see at least a 20% incline or decline. So let's take a look. Right here in this year, the stock moved at least 65%. Right here in this year, it made an incline of 54%, and at one time it made a decline of 33%. But overall, it ended up closing out the year around 47% higher. Right here, it made an incline in this year around 500%, closed the year out around 356%. All right, so it's safe to say that this is the primary trend. The second type of trend is the intermediate or secondary trend. The intermediate trend goes against the main direction of the primary trend for at least 3 weeks to 3 months. During that time, the price should incline or decline at least 1/3 to 2/3 of the stock's price. The fluctuations of price within the primary trend are the intermediate trend. So we can consider this decline in Tesla's price an intermediate trend since it is within the primary trend and it declined 2/3 of the stock's price. The third trend is the minor trend or the short-term trend. The price fluctuations that make up the minor trend are very brief, usually lasting from 6 days to around 3 weeks. So you can see right here, Tesla made a swing high, then declined 3 days. Then you can see right here, it moved higher and then declined another 5 days, before moving higher and breaking this previous swing high and forming a new one. And the total amount of time in this whole area was around 24 days, so a little over 3 weeks. This would be considered your short-term trend. We can identify the direction of the trend in multiple ways. The first is by using swing highs like we talked about earlier. Tesla formed a swing high, then a swing low. It broke this previous swing high and formed another swing high. Pulled back and made another swing low. Broke this previous swing high and made another swing high. Pulled back and formed a swing low before breaking again and forming another swing high. Pulled back, formed a swing low after it broke this swing high. Made another swing high, pulled back, broke that swing high, and made another one, So this is considered now a swing low. If we take a line and draw this, we can see that the stock is moving up and down in stair steps. But overall, it's getting higher, right? The price is moving higher. That's the first way we can identify the direction of the trend, by drawing the lines between the swing highs and swing lows. The second way we can identify the trend is by using trend lines and drawing a line across the swing lows for an uptrending stock or the swing highs for a downtrending stock. So let's draw a line off of the swing lows here using the last swing lows, and we can see right here the slope of our line is moving higher. Like we talked about earlier, a stock in an uptrend is making higher highs and higher lows. That means that each swing high is higher than the previous swing high, and each swing low is higher than the previous swing low. And you can see that right here in this long-term trend, the swing lows are lower than the previous swing lows, and the swing highs are higher than the previous swing highs. So you have this swing high is higher than this one, this swing high is higher than this one, this swing high is higher, and this swing high is higher, and this swing high is higher. So right now the stock is moving with higher highs and higher lows, which means the stock is currently in an uptrend. Sometimes we may not be able to correctly identify the trend just by looking at it. It may be slightly confusing. So we can use our trend lines and our swing pivot highs and lows to identify the current trend or the current long-term trend. So we can take a look at Lee's chart right here. So we can identify the swing high and swing lows on Lee's chart. So right here we have the IPO, the initial public offering of Lee, where it was released onto the market. It rallied higher and made a high. It pulled back, but it never actually broke this low. Then it pushed higher, but it never broke this high. But when it pulled back this next time, this low broke this previous low, which formed a new swing low. When this swing low was formed, since this was the last highest high preceding the swing low, this becomes the new swing high. If we draw our trend lines across these swing highs and swing lows, we will see the direction and see how they're sloping downwards. Right now this is kind of in a downwards channel, and you can see that they are actually sloping to the downside. Also, we can just take a look at the price. The low was 1431 here, and the low on this was 1252. So we knew when the swing low of this broke this swing low over here, this became the new swing low, and it was actually currently in a downtrend. And if we check the highs, just the prices, 4770, the high of this price, 4140, the long-term trend was down. Moving averages can also help us tell the direction of the trend. The problem with moving averages is that they are delayed. And depending on the length of time that the moving average represents, these can be a long delay or a short delay. If we take a look on Tesla, you can see that right here, the moving average was sloping up. So we could tell the trend was up just by looking at the moving average. But Tesla actually started to decline after forming this swing high right here. But the moving average didn't start to decline till way over here around a year later. All right, and sometimes the price would have already severely declined before this average caught up. So that's the problem with using moving averages depending on the time selected. If it would have changed this to a shorter term moving average, it may have caught it quicker, but it may have also signaled a false reversal or a false decline. So that's a basic video on what a trend is. Thank you for watching, and I'll see you in the next video.